All right, welcome back, mates. Crypto Leverage Trading Group. Hope everybody's doing well. Friday morning, options expiration Friday, and where we are in the markets. We are on YouTube. Go live here. I'm gonna put this as private for the private group for Cryptoballers, Oracle disciples, and everybody in the crypto verse. It is March expiration. It is here, and we will see what the impact is on the markets overall. What does that mean? Okay, obviously, these options expirations, especially for Ethereum, are new in 2021 for the most part. Okay, options expiration for Bitcoin are not new. They go back as far back as 2017. So why is it a big deal? It's always a big deal because a lot of people that have been around in the cryptoverse for a long time associate options expiration, an option CME, Chicago Mercantile, exchange in Chicago, United States, with what happened to Bitcoin in 2018. And there's probably some truth to that, although it didn't happen right away. I think the expiration started, not the expirations, but the option contracts and futures contracts began to get written, if I remember correctly, in December of 2017. And then by the first quarter of 2018, we began to experience massive declines in the value of Bitcoin. Why is that? Well, obviously, institutions by nature, quarterly basis, if you go back and you look in 2018, what was the sentiment for Bitcoin on the street? What I mean by the street is Wall Street, what was their perception of cryptoballers, right? Of people buying cryptocurrencies. As far back as, as 12, 13, 14, 15, it was cryptocurrency was a very libertarian, concept for the most part. If you want to draw from political spectrums, right? No one was really worried about Bitcoin, right? Like, it was this thing, the kids are doing, right? It's this trend, the kids, right? The punks, it's the punks, right? It's the nerds, right? You get all that. Well, you know what? I think we've proven in the last decade to 20 years, nerds have pretty much taken over friggin' the world, especially in technology. Can we agree on that? Like, there's that, depending on how old you are and what generation you're in, you've seen it. Like, say whatever you want, but that's the reality. And now we've reached this new, phase of Bitcoin. Mass adoption, mass acceptance. The street's accepting it, right? But are they? And so there's that concern. There's always going to be that concern. Like, are the institutions, is it nefarious? Are they really just going to end up taking Bitcoin out? Are they really just going to end up writing all these future contracts, writing all this stuff, and shorting Bitcoin and basically destroying the cryptoverse? Because the reality of the forces you have, the very forces in the United States, for example, that ignored Bitcoin and blockchain for a decade, now can't ignore it anymore. They just had their asses handed to them in the GameStop Robinhood fiasco. But human nature, human behavior, just like we see a lot of times with politics in the United States, it becomes a fad and then it goes away. And they know this. The overlords in Washington know this. They just wait it out. You see this issue after issue. Like, who's talking about immigration anymore, for example, right? Like, that just went away. Did we solve it? No. Who's talking about monetary policy? Post 9/11, monetary policy in the United States is a joke. It's a joke. It's funny money. That's the reality. For all the people who say cryptocurrency for the last decade has been this kind of like, oh, it's not real. It's a fraud. It's a scam, terrorism. Whatever. What money laundering, whatever. You know, you've been around. You know what has been said. Anything and everything on CNN to take Bitcoin down. Okay, that's the reality. If you've paid attention to the last decade, either A, not covering it all, or B, undermining and attempting to take it out and create fear in the market that you're going to lose all your money in Bitcoin. That's the mainstream media in the United States because they can't control it. And just like politicians and just like the overlords in Washington, when you can't control something, that's when they get worried. What's going on right now in the United States? I think I just read or came across early this morning. The SEC is now looking at NFTs as possibly being, that's non-fungible tokens, not being legal-ish. What's going to happen to NFTs? Because I'm not a big NFT guy in terms of altcoins. They've had a massive run-up. I'm more of a DeFi guy, an exchange guy. I like DEXs. I like things that provide solutions. I like, like synthetics and Aave and things that allow people, users, right, to provide solutions for them. Derivatives exchanges, right, as a leverage trader, right, like opportunities. But then NFTs is great. I'm not dissing on any of those guys that are out, but it's just not my thing. It's just not, it's not something where I would put money in, because they're fundamentally, it's like invest in Amazon. Like it's really like a gallery or a marketplace, right? But there are some that are interesting projects, but that's just me. That's why I don't do videos on NFTs very often. Other than to highlight news about it, right? I focus more on, adoption and acceptance and reality. Okay. And when you got NFTs that are worth 200 million, 300 million, I mean, that's not really reality. But that's the market we're in terms of institution and retail. Retail runs, then we get this sell down, institutions come back in. Retail runs, institution, it gets sold back down. So look at right now. We're looking at Friday, March expiration. Where were we last month? Okay. Did a video quick for the group. Where were we last month? February 26th, 27th, 28th. Same exact scenario. Options expiration. 4,000 point drop off. Doom and gloom. Going back. We're going to 35,000. Okay. We're going to go down. Okay. January. If I told you that in January you could see a 25 to 30% decline. If I told you that in February you could see a 20 to 25 to 28% decline in Bitcoin, value of Bitcoin. And then I told you on March 1st that you get the option expiration and you'd have a 15% decline in the price of Bitcoin. Bitcoin is trading at 53,125 right now. Ethereum is trading at 1637, Litecoin 180. Okay? If I told you that, would you take it? Would you be like, okay, 15% decline. We just had a 30. We just had a 28, 25. I mean, when I mean by that, I mean decline, like boom, these backdrafts, these sell downs. I call them they're market adjustments is all they are. They're not epic dumps. Stop clicking on that crap. Okay? Stop clicking on that crap. All right? Because they're not epic. There's no epic dump. The epicness of Bitcoin is the bull market, is its bull run. That's epic. A 6,000, 7,000 point adjustment in the market and correction is not an epic dump. Like, it's just not. And they know it, and they're disingenuous, and they want your click. And that's just the reality. Okay? These are people, this is their business, they're monetized channels, okay? This is how they generate their income. They're entertainers, they're content providers. Great. But do not let that influence, okay, your perception of the market, okay? It's a factor because they do influence behavior. And that's what leverage trading, in essence, is. It is behavior. You are trading behavior. I cannot say that any number of times. What does it matter if Bitcoin is $60,000 right now? Why does that matter? What would it matter if Bitcoin was to fall right now below $50,000? What would it matter? Changes behavior, changes perception. And that's all you're trading with Bitcoin and crypto, NFTs. You're not trading value, okay? You're not trading. Now, you can make your argument that in Bitcoin, and a lot of the institutions now are pushing back against it. It's really not a store of value. It's really not a hedge against the dollar. It's really this. It's really that. Well, okay. We all know that's bullshit, okay? And one way or another, or institutions would be moving in now and putting 2, 3, 4, 5% of their treasury, basically their treasury, okay? Their overall financial future into something that's not real, okay? So you have to think about that. Now, this week with Bitcoin, we've gone through all the on-chain stuff, okay, which still appear relatively bullish. Like, okay. And then we get news, and we have global monetary policy. We have a $1.9 trillion stimulus package rolling out. And did you click on this? Everybody's going to use their stimulus package to buy Bitcoin. Okay? More clickbait. No, they're not. Now, the people who got a stimulus check, who didn't need a stimulus check, should probably put it in Bitcoin. Because it's, if you go back a couple of 12 years ago, Obama money, free money, Bush, free money, right? Send everybody out a check. Okay? Trump, send everybody out a check. COVID stimulus, send everybody out a check, right? Whether they need it or not. It's based on income. Okay? So, if you fit in that income, if you've taken care of your money, you've already been invested in Bitcoin, right? You've taken care of your finances, you've taken care of your mortgage, you've taken care of your home finances, right? Or your small business, okay? It's free money, right? So that's where that mindset comes from. Everyone's just going to go out and buy Bitcoin with their stimulus. And there's a certain population in their 20s that are going to take that money and invest in Bitcoin when probably they see that as potentially being able to double their money, triple their money, 5x, 10x, depends on who they are. Depends on realistically what they're seeing. And that's true. I mean, that's a behavior. Okay. But we have not seen a stimulus run up. We have not seen a stimulus run up in Bitcoin. And the checks now have been going out now for about, I want to say 7 days. 7 days, I think. So we'll see, right? Maybe people are waiting for this today, options expiration shakeout, to get in the market. And then we see Saturday FOMO tomorrow. We're back above 55 grand, 58 grand, going to test 60,000. And then where do we go? The emotions and the behaviors completely change. The whole mindset. You will have forgotten all about 51,000, going to 48,000, going to 35,000, right? Back test those people. 17,000 last night, I heard on a channel. That in the realm of possibility. Okay. Everything is in the realm of possibility when you're talking about cryptocurrency because we just don't know. The Pi cycle right now, which is an indicator that's gotten a lot of play. I review it. I keep it open. I like to take a look at it. I usually take a look at the Pi cycle on Sundays, Thursdays. Those are my 2 days. I do not trade for the most part, and I very rarely do a lot of videos on Thursdays. Why? Because the market tends to be flat on Thursday. It's a perfect opportunity to take a step back and look at where you are. Sunday, same thing. It's usually always down, okay? So it's a perfect opportunity to set your week up as a leverage trader and go about your business, okay? And set your week up. Set your zone up, your 5-day zone, your lagging indicators, what's happening in the week ahead. Go back, look at February, look at January, look at December. What? Did we not, the past 3, Sunday to Monday, sell downs in the market, Crypto Leverage Trading Group, if you're in the trading community, we talked about it coming. Like, these are patterns. The market is pattern. Trading leverage is about trading behaviors and market pattern recognition. Okay. And that stems all the way down to your 1 minute. Okay. But it starts much higher. Okay. And finding the trends in the market, finding out what's happening on a macro level, whether that be socio-political, that'd be global monetary policy, the SEC, okay, understanding these things and how they can impact and drive the market in and out, exchange flows, what's the inflow, what's the outflow, what's the balance flow, long-term holders versus short-term holders. Okay. You know, how many people that are invested right now in Bitcoin, that are in Bitcoin, are in profit, right? A whole bunch of indicator models that you want to look at, right? For the most part, people are still in profit unless you bought at 58,000, 57,000, 60,000. You bought the top. Okay. Did not buy at a support level. You bought at a resistance level, at an all-time high level. Now, there is that train of thought. Okay. And it's just a camp in the crypto and actually the stock market as well that will tell you to buy tops because they tend to go higher. Okay. And there's some validity to that. You know, it's all probability. It's all percentage. But you also run the risk of getting wrecked. Okay. Unless, if you're a leverage trader, you hedge it. And that is going on 9 a.m. this morning. And that's where you should sit. If you go on to the YouTube channel, Cryptoballer Leverage Group, Leverage Trading Group, Cryptoballers X, you see we're hedged, right? Why not? Like, protect your trades. Average down your trades. If you're long in this market, if you were long at 55, if you were long at 56, 57, long as in a stack or long in a leverage trade, average that trade down. We're now at, I think we should be at 53,000, 53,027. Average it down. What are you waiting for? Don't sit and watch your trade dissipate in front of your eyes. Okay. Trading is action. Okay. You want to be trading. You don't want to be sitting on the sidelines, watching red or green, right? You want to be active in your trading. So there's no other reason. If you're in our group, we do what's called a 5-10-240. 5x, 10x leverage, 240 hours. You can do it on any exchange. It doesn't, depending on what their liquidation period is, if you're allowed. But understand that there are quite a few exchanges out there that will charge you overnight fees for holding open leverage trades. Okay, so you need to be aware of all that. You need to do your due diligence. Obviously, this is not financial advice. Nothing I'm giving you is financial advice. It's all commentary. It's all opinion. Okay, content provider. And you know, you need to know your own due diligence, contact your own financial advisor, do all those things that you need to do, because inevitably this is your risk that you're taking on. Okay. Whatever it is, bonds, equities, options, stocks, you know, anything. Everything is the same. It's all risk. Okay. And you want to do that. Okay. But you also want to protect your open trades, right? So you average them down. And on BitSeven, for example, you have 10 days, 240 hours to stay in an open trade. Now, you can add to it, extend it, okay? Buy down, we call buy down, averaging down. So say you entered in a leverage trade at 10x at 57,000, the market goes down to 52,000. Well, you're 5,000 out of the money. What does that mean? It means the market's got to recoup $5,000 before you get to in the money, the strike. If you're an old options trader, we used to always use the term strike price, right? The strike. Why not cut that difference down? Okay. How do you do that? You cut that difference down by entering a like trade. So if you were 10x, enter in 10x again. Okay. Average, bring your average down. Cut the distance between that $5,000, 52,000, okay, and 57,000. And put it smack in the middle at 54,000-ish. Okay. And then you just cut the difference in half. Okay. But what did you also do? Okay. And these are the factors that come into decisions that you make. Every leverage trade that you enter has to be supported by technical and analytics and on-chain metrics. If you do that, you will be a successful leverage trader. If you don't, you're not going to be. And what leverage are you using? You know? And I see videos all the time. I get messages all the time. 50x, 50x, 50x. Fine, get wrecked. It's your money. It's your money. If you're following some guy that's trading 1 Bitcoin, 10 Bitcoins, 20 Bitcoins, is telling you how he's making massive money and right. Okay. Follow him. Okay. Are you trading with 1 Bitcoin? Do you have 3 Bitcoins? Okay. To support your 1 Bitcoin. That if something goes wrong, he can average it all the way down, right? Can you? If you have $1,000 in this market and you're putting it in a leverage, okay, decision, right? The biggest mistake and the biggest opportunity for beginning leverage traders is wallet management. It's not an entering trades, but it's not really exit and entering, okay? It's wallet management. How to manage what leverage to use, when to use such leverage, and your entry, okay? As I said before, if you enter your entries with support from technical analytics and on-chain metrics, the probability of your successful trade, boo, okay? If you don't, boo. That's why. Because those are the drivers of the market, okay? And so buying on support levels, confirm support levels, increase your probability of success. Lowering your leverage increases your probability of success because your cut loss is lower. And if you're buying on support, and your cut loss is well under that support, you've even added, it's like putting another added blanket on a cold night. Okay. Those are strategies. Having a plan. Okay. If you're willy-nilly, friggin' just like booming, oh, it's up today, it's boom, let me go leverage trade 50x, and it's at an RSI of 85, and you're going in 50x, good luck. Good luck. Hey, man, if you blow out that trade, congratulations. Well done. Let's have a pint together, okay? Great. But you're of the 5%, and they don't tell you that, okay? The guy who's trading at 50x every day, okay, right? Whether he's got a channel, whatever, okay? He's not telling you what the percentages are at 50x, 75x, 100x. What's the percentage of winning trades on the exchanges that are being used? You hear that information, you're like, wait a second, you telling me that I got to only have a 6.7% chance of winning a 50x leverage trade? Yeah. So you better be technically sound. You better be on-chain metrically sound. You had better be, dialed in to the market. Okay. Whereas lower leverages, they go up and up and up. Okay. These exchanges exist not to provide you Bitcoin. These exchanges exist not to provide you with financial freedom. These exchanges exist to take your money. Okay. That's how they make money. Okay. It's not like you're being, they want you to trade. It's how they make money. Okay. And if you're successful, great. But if you're not successful, they're still making money. Okay. They want to retain you. You see that on more and more crypto exchanges now than ever before, where even if you get liquidated, they will give you a portion back of that liquidation back into your wallet because they don't want you to leave the exchange. They want you to continue trading. That's the model. Increase trading activity. But at the end of the day, these exchanges have got to own these cryptocurrencies in order regulatory, which is why a lot of exchanges get banned in the United States from overseas and from elsewhere. But they've got to hold these, assets. I don't want to get too technical about it, but they have to hold these assets that they have on their exchanges as well, in order to be able to have that funding mechanism. Okay. So that's huge, in terms of understanding exchange flows, supply, right? What's happening really with Bitcoin right now? That whenever you get these retail backdrafts, which are driven by who? Multi-conglomerate media organizations, institutions, giving out a slow dribble of fear to shake you out of the market, and then they buy up. Why? Supply. You're the average retail person, the average person in the United States or elsewhere that's buying Bitcoin on Cash App, PayPal, Venmo, I think. You think they're concerned about liquidity? You think they're concerned about the supply of Bitcoin? Because what's their concern? Like I just open up my phone, I go to PayPal, and then I put $100 into Bitcoin. Easy. Right? They're not thinking about liquidity. They're not thinking about how much supply is actually out there. Okay? No, they're not thinking that. Okay? The institutions are thinking that. And that's the difference. Is no one wants to overpay for anything. Okay? In this economy, especially. Okay? With rising inflation that's being ignored, prices going up that's being ignored. Gas, I know where I live, gas is going up 60, 70 cents. No one's even talking about it. Okay? A year ago, 2 years ago, they'd be rioting in the streets. Okay? I mean, that's the difference. Again, behaviors. Who controls the behavioral mindset of the average person in the United States from a political perspective? The media does. The media, we just had administration change in the United States. The media loves the president and the president's party. Okay? That's just reality. Okay? To deny that is stupidity. That's just reality. Just take a look about a year ago. Okay? The financials right now, a year ago. Gas prices, flour, milk, you name it. Normal stuff that everybody buys. Okay? Compared to 2 years ago, compared to today. Right? This is only going to get worse, but they're not going to cover it because they don't want this guy to look bad. Okay? They could care less about the other guy, the previous guy, who they hated. Okay? But again, it's just like crypto. Okay? Peter Schiff, right? Dump on Bitcoin every week, right? He's a hater, right? Okay? And then you got people who love Bitcoin, right? Politics the same exact way, only on steroids. Okay? Everything this guy does is wrong. Everything this guy does is right. If he's doing anything at all, we have no idea. Okay? But that's the reality of the United States. That's just the dynamic. And the media acts as the driver of everything. It's their lane. They can portray Bitcoin as the great evil and money launderer, or a light bulb could go off and they could portray Bitcoin and crypto and blockchain as the next evolutionary, innovative, mechanism ever. Okay? And if they did that, where would we all be? Right? And they're not. Okay? Not yet anyway. Okay? There's no interest there yet. Because they're controlled by the politician, the political elite class, and the overlords. And, they are all about control. Okay? They're all about control. All right? And they can't control Bitcoin. They can't control you yet. Now, they can start to take away your mechanisms in which to procure and accumulate cryptocurrencies if they want to. I mean, they can crack down on exchanges. They can increase regulations and but they'll do the little subtle things, okay? They'll do the subtle things that'll make it a little harder for you. But they're not gonna do anything to Bitcoin. Okay? And that you wanna think about that. Okay, and you want to know that. So we're entering now with Bitcoin this week. Options expiration. It's 9:23 right now. And here's where we're at: is bull flag, right? What happens in a bull flag? Pattern repeats. We should be going higher. Does that mean that we're not going to go down to 48,000 today? Does that mean that the market isn't going to absorb all these options? We're now at 50. We're down off of 53,000 to 52,600 now. Sure, we could go down to 48,000, 50,000. I mean, and if you're a leverage trader, you should have, your straddle in place. If you're concerned, if what you're looking at and the metrics and the technicals tell you that there is a probability, okay, that we will fall to 48,000, then you should have a straddle in place. You should have an up and a down, okay? And then if Bitcoin goes to go up, you know what's going to come after that, right? A sell down. It always does after options, right? And so you would then, as I talked about earlier, you would then average up your down closer to 55, 56, 57,000. Keep your trade. That's a hedge. It's kind of like a stop loss trade, a hedge for any whipback or backlash. I love straddles, okay? Especially when you're on indecisive areas or indecisive times when there's really no clear indication if you're going higher or lower. And that happens in consolidation patterns. It happens in continuation patterns, right? Now, right now, it's 60-40, okay? Because we're in a bull flag. And we tend to pop out and move in Bitcoin. We tend to move forward, move higher in a bull flag. But I'm factoring in some other things, okay? Rising RSI, the pi cycle, whether you believe in that or not. Because really, this is really, I don't think I mentioned it before. This really, the pi cycle is really, this is its first real go at all of this, okay? It's a very new, it's a newer-ish indicator, okay? Created after the previous phases of Bitcoin, okay? So it, we're not really sure whether or not it's really exact or not, or whether it's a good indicator of a top, okay, or not. We'll see. But it's still a factor. So that's why I'm like at 60-40, I'm normally 75-25. This bull market, I've been 75% probability Bitcoin goes higher, 25% probability Bitcoin goes lower off of triangular formations, and I can flip them at any time, be like rising wedge, whatever, descending, ascending triangles, change that probability to traders in terms of my commentary on the market, depending on what that situation is. I think we're 60-40. We should go higher. Does that mean that we're going to go higher? Not financial advice again, obviously. But, we should. So we're going to see here, 52,007, 729, and 1629. Ethereum's kind of just staying in that 1620 channel, which is actually pretty good. We'll do a couple other videos on Ethereum coming up. But in any case, that's where we're at. Okay. My 30-minute take on everything that's happening in the market. I'll share this to the group. Hope everybody is doing well. Everybody's set up for the weekend. That you have your straddles in place. That you have you average down your longs in the market. That you've taken a look at, seriously accumulating long. That's in terms of your stack, non-leveraged trade. Ethereum and Bitcoin during these during these backdrafts because of the supply issues, especially with Bitcoin. When I say supply issues, been here before, January, February, March, okay? Still in a consolidation, okay? Now, we'll get back and we'll talk about 48,000, how critical that level is if we were to get down near that level. But it seems like Bitcoin wants to go higher, at least into 53,000, which we would like to see today. And then start to retest those, previous highs. It'll be interesting to see what the market sentiment is after today into the weekend, coming back Monday morning, if Bitcoin remains above 52,000. Okay. I think you'll see a mind shift, or you'll begin to see more of a shift away from the doom and gloom, and you'll be getting more on YouTube of 70,000 Bitcoin. Okay. We're still 65, 68. That was our target last month. That's still the target. There's quite a few metrics that point to that. Technicals, Fibonacci, if you follow that, okay. We got options that are being written for April, for April, May, whatever, that are 75,000, whatever. Okay. Still realistic. It's where I sit. So again, try and keep your emotions settled. Use your technicals, use your on-chain metrics. Look for your support and resistance levels. Look for certain areas in the market where you can average down or average up your entries if you were trading leverage, and bring yourself down, okay? And get yourself closer to where. And the reason you want to do that also is, what if we see that 2,000 basis point move up? You want to be in that as close as you can get down, okay, to the current price of 52,720, okay? So if you lower it to 54, 53, and you're at 55, okay, when we get there, you're in the money above that, right? You're not waiting on it to come to you, okay? And that's what I mean. And that's how being proactive, and that's trading, okay? That's being an active trading, staying in your trade, okay? It's not, it's not doing all this minutia things that other people are having you do with ALCMs and ridiculous stuff that's just really getting you to enter more trades, which pay them more commission off your trade, and they don't work. Tripwires, ALs, 1X, ALCMs, they've been debunked, okay? And I'm not the only one, all right? That's out there. Like, I'm just telling you, they've been debunked by people who do this, like, that are experts. I'm not an expert, okay? I learn everything every day in this market and learn from all the traders in our group every day, okay? It's all about application, okay, and applying strategies and methods and tactics to your trading, all right? So I hope you got some value out of this, and if you are not a member of our free trading Discord, it is growing every day. Please make sure that you join that Discord and drop an email. And please like and subscribe to the YouTube channel, as well as at CryptoballersX on Twitter for updates, trading updates, kind of like just, commentary on the market. A lot of retweets of people that we follow. I'll do a couple videos on the guys that I follow, okay, and that are going to provide you valuable information, okay, technical information, on-chain metric information that's not BS, okay, that's just, it is what it is. You take it for what it's worth, and go forward with that. All right, I look forward to hearing about everybody successful trades, especially going into this weekend. And anyone has any questions, you know where to find me. Always available. You can find me. You can email me. You can find me on Twitter. You can find me on YouTube. And you can find me always in the free trading Discord. All right, mates. Have a great day.